It's Quant Trade Edge, and I know I hadn't posted in a little bit. It's Sunday, May 5th, and haven't posted in a little while, but I think we are at a major turning point for the dollar and for the stock market and the bond market. So I just wanted to post my homework thoughts. These are the type of homework and the thoughts that we share in our Discord every day, and I just wanted to share it with a broader audience today. So this is the chart of gold. And if you look at the narrative here, you kind of create your own narrative from day to day as to what's happening. And here we have an ugly down day. We have a lower low, lower high, another down day. Then we have an inside day. And usually after you have a big move and then you have some inside day action, you're getting ready for some continuation movement. And what happened here was a little spike below and it got rejected. And that was on Friday, May 3rd, which was, the jobs number and all that. And actually, the initial reaction on the jobs number was higher. And then it came around, gave it up, but then it spent the rest of the day rallying again. So that tells me that there's a big rejection here, and there are probably some shorts in gold that haven't accepted that yet. And we're currently inside again, but I think that gold is ready to head back higher. And another thing that just is very pretty, this is CQG, and they do their own canned Elliott wave type stuff, and it's not always right. But if you look at this move from February 14th up to the high, we did get down on that rejection to the 38.2, almost perfectly. And that is a reasonable reaction, reasonable correction of that third wave up. And in commodities, the fifth wave is typically the biggest wave, and the fifth, 505, if it's an extended wave, is also typically the biggest. So this is kind of where we can start heading higher, and at the very least, I would look for this 618, which is 2550, but could be even higher. And if you go across to silver, you've got a very similar thing going on here. You've got we got down to the 50% retracement of this wave 3 move, and silver is acting stronger than gold, which is always a bullish sign. Silver is like the high beta version of what we're doing. So similar. We had this down day, and then this was inside, came down and rejected. And then the next day you tested down, but still you had a higher low and a higher high. So it was an up day, and we got the same thing again. We got a higher low and a higher high. We have another up day, and this is ready to head back up as well. So you've got gold and silver in a bullish stance. And you're talking about 32.66, 32 bucks plus for silver on that move. And the currencies were very active on Friday. Swiss franc is one of my favorites right now. It had, let me put the LBR 310 oscillator. You can see it on the RSI also. And I kind of switch between the two oscillators just based on mood. But, here's one push down. Here's another push down. Here's really another push down. So it was really like 4 pushes and higher momentum on each. And this last bit was like a breakdown and quick failure. And that happens at the end of trends. Go back and look at there was a video I posted on gold, and it would have been this day right here, April 12th, where you had this pattern on a 5-minute chart. And it basically dropped, I don't remember, $70 or something ridiculous. I remember I bought put options for $2.70 and sold them for $15 and thought I was a genius, and it went to $70 all in the same day. So that's usually a pretty, that was a 5-minute chart and it played out in one day. This is happening on a daily chart, so it just technically happened on Friday. It can still pull back right into here. But then I think this low, the bottom is in for Swiss franc on this low, is my opinion, based on this pattern failure, based on the overextended commitment of traders, and this beautiful divergence. And here you can see the same divergence on the LBR 310. It's just called 3 pushes. Got one push here, one push here, one push here, and it had an extra push, and I crudely call that a 3 pushes and an FU. And February 2018, you can go back and look at Netflix. I believe it was Netflix, either Netflix or Amazon. I think it was Netflix. Netflix was the strongest stock in the market until that February 2018 pullback. And I remember this vividly because I was on vacation in Kauai and up at 3 a.m. trading this stuff, and it had the 3 pushes in the FU pattern on the 5-minute, and that was the absolute low of that correction. So that's just, so it's kind of like on the daily we have a pattern that indicates the low on this daily, and also it was also on the 480-minute. Basically a final breakdown and then rejection. So just everything's pointing higher on this Swiss franc. Let's see, where would we have a U-turn? We would need to take a low out and then take out this high to have an actual U-turn. But if you look at other currencies, we've already gotten our U-turn. So this is the euro. We had a higher high, a higher low, and we took this out. That is a U-turn. Australian dollar also had a U-turn. On the Australian dollar, this move up is bigger than this previous move down. So you already have a higher high, higher low, and then we turned up from there on the jobs number on Friday. Canadian does not quite have a U-turn yet. This is all one leg up, one leg down, and the previous leg down is bigger, right? So you need an ABC that gets taken out. So now that we got this lower low here, if we take this level out, that will be a daily U-turn on the Canadian. British pound, this was the last swing down. So we already had one swing up higher than the previous swing down. So this down here, taking this out, was the U-turn. So what a U-turn is, it is a trend reversal. You can ask anybody what a trend is, and you'll hear all kinds of things about moving averages and whatever. There's actually one technical definition for a trend reversal, and it is a higher high. This is a higher high than this, a higher low, and then turning up from there. And turning up from there means going through that line. And the other variety that we had in the euro, this is not a higher high because this higher high is up here. And that's why we needed this to come here. So this is your higher high, and this is your higher low. And now that would be turning up from there. So that's the difference in the two types of U-turns, right? In this type of U-turn, it's like you have an ABC that fails, and that's because the previous high is so far above. Or the example that was in the Australian dollar, because this last swing was so low, this first swing up is the higher high. So there's the higher low, and that's the U-turn. So I basically showed you a handful of currencies that all look like they've turned, and then gold and silver, which look like they're heading higher. And again, a lot of this can be attributable to the bond. This is the 30-year bond, which would be the opposite of the rate. And we had a 2B pattern where we took out this low on April 25th, had an inside day, then we took out that high. That would have been your buy with a stop below here. And these are patterns we point out in real time in our Discord channel. And this is what's causing the dollar weakness. And that is just, we have this pattern. Rates, bonds go up means rates come down. And then this whole comparative thing is the comparative interest rates between currencies is what drives their value. So if U.S. rates are headed lower, which I think is a big change to the narrative, right? The narrative is, oh my God, rates are going higher. Here's our pattern. A few days of confirmation. Rates are going lower. Dollar's going lower by virtue of everything else going higher. I don't have live dollar pricing here. This does not just have daily stuff, but you can see this sort of went and laid a trap up above. This is the dollar index, the DXY, whatever it's called. This left a trap up there and came off, and then we've totally taken that out. So sure, this can bounce up to here, but that top seems fairly secure. Now, the implication of this on the stock market, if we look at a pit session futures chart, again, if we just draw a simple trend line from here, we can even draw it all the way down here, but even if you draw it here, we've gapped above and gone above and closed above that trend line. You can see we've got one higher low here, a second higher low here, and breaking out to new highs. So the other argument would be that it's a bull flag or a bull channel, and yeah, I guess I could see that, but I'm banking on this trend line, and then furthermore, again, looking for reasonable retracements. If this is our wave 3 move, we've gotten very close to 50%. So we've had a reasonable pullback there. So we'll see. This could be a trap, and we head back down into this bear flag. But given the change of nature in bonds and the change of nature in the dollar, my bet is that we've already seen the low and the correction is over, and we're heading to new highs on the S&P. And those highs would easily take us to, I believe it was around 54 to 5,500. You've got this here 54, this here 55, 15. So that's what I think is going on. Lots of ways to play it, with the futures, with equities, options, but that's the macro read. And, good luck, aligning with that.